Hello everyone, it's Mark here at TSLA, and unfortunately Tesla didn't do so great today. It's down 1.4%, which is a closing price of $265.28 here on July 25th, 2023. That was a $3.78 drop per share. And as you can see, we still have our squiggly lines that we've drawn and kept on here for a couple days. We were talking about yesterday seeing Tesla work its way up to around 274, which would be one of the lower highs from Thursday of last week. Unfortunately, it didn't get there. It did get to 273, or right at it, essentially, at the open. It was a gap up, and from that moment, it sold pretty completely. Now, you could say in the early morning, and this is the minute chart, you could say on the early morning that it was kind of holding its own right here in this area for about, a 1.23% drop, and it was consolidating until around 10.13 and 10.14. And just remember that time because there's a reason why I think we continue to sell off all day. And when we made it back up to that same point in that consolidation around 10:14 a.m. and at that point was 11:47 a.m., it sold off again. So it wouldn't really get over that point at that we hit at 10:14, and I'll show you a reason why a little bit later. Now, the gap up, it kind of made sense. GM posted decent earnings, and GM itself was up a little bit pre-market until people started to realize, GM is not doing so great with a lot of, their internal combustion engine business is doing really well, but they're really touting that they're going to be seeing really, really strong growth due to, increased production, them reintroducing the Bolt EV, because I don't know why they wanted to cancel it when it was their number one selling EV. It kind of made no sense. They have a lot of EVs sitting on dealer lots and manufacturing facility lots, not moving at all. So GM sold off pretty hard right at the open. So even though there's a little pump in the pre-market, there was a sell-off on GM. I think Tesla was a little bit sympathetic to it. I think that's one of the reasons it couldn't hold a high price compared to other tech names. So if you look at the Nvidia or the Microsoft or Google, they are all up about 1% or so, and they held that range all day long until the earnings came out for these big tech names after hours. Now, let's switch over to the browser and talk about a little bit of news before we look further at the charts. And the first thing we're going to see is Gene Munster's tweet about Microsoft. Microsoft sold off in the after hours, and Google did it. Google was showing some surprising cloud growth again, whereas Microsoft was actually showing less growth in Azure, their cloud system. They also didn't really guide for much more revenue, as they're not able to monetize AI. And that's one of the issues at hand, is that the monetization of AI is what is going to make the AI not a bubble. Now, this is another reason why Tesla wasn't very strong after hours, but we'll show some charts to show that most of the tech names weren't really great. And if the QQQ is going to sell off, names like Tesla and Microsoft are all going to be sympathetic with each other and drag each other down. Google was very resilient, though, during those sell-offs. So Gene says, Microsoft just gave guidance and stock has sold off 3%. In my words, they're saying not to expect an AI revenue inflection point in fiscal year 2024. That's, by the way, guys, that's next year. We still have, 5 months of this year. No money for AI products next year for Microsoft, possibly. Margins are to be flat year over year as they're scaling infrastructure for the AI. So, just like what happened in the dot-com bubble in 2000, when after a couple of years of people being really hyped up about the internet, they started to understand that there wasn't a real way to generate revenue. Like, you're not going to be paying for email at Yahoo. You're not going to be paying for websites at GeoCities. There's so many services that were free. There's so many ways to not use the internet as well. Like, you didn't have to use the internet for your news. You didn't watch TV on the internet. There was very little way to, monetize other than some banner ads on the internet. And we're coming up with the kind of the same situation. We think about AI, Tesla being an AI company, and that's great and all, but themselves have also not been able to monetize AI on a wide basis. Like we have a lot of people that are in FSD beta, either paying upfront in a large lump sum or subscribing for a couple $100 a month. And that's all well and good, but the idea of AI, generating income for the business would be more so that everyone has the FSD, and the software like margins would justify all the spend when it comes to AI infrastructure. Same problem with Microsoft. They're spending a lot of money on their AI infrastructure, a CapEx spend. And we'll show a chart later how that really translates, but it doesn't necessarily help Microsoft in the short term, or even looking out a year, as well as all the other companies who are using AI to hype up their own selves. And I understand completely that like from a ChatGPT perspective, it's a very enticing product. But how are you monetizing ChatGPT within itself? There's a cap on the profit that Microsoft is going to be able to get from ChatGPT anyways. And are you going to be paying for Microsoft's Copilot when you can just be using free apps that utilize the same kind of backend that you will get from ChatGPT? So it's going to be an interesting couple months, year or so. Not just Microsoft, but other companies that are spending a lot of money trying to get compute for AI, or partnering up with other AI companies. Is that spend going to translate into revenue and increased profits? I'm really not sure. If you're a company that is trying to catch up now, are you able to turn a profit on that anytime soon? Most likely not. Like this is going to be almost like big mega cap companies thinking they're startups, and just hoping that down the line that people see the potential for revenue. And at the moment, no one's wanting to pay for that. But at the same time, Microsoft was near an all-time high, and that's not necessarily a bad thing after being down for like a year and a half. Think about Tesla. We are down so much. Like it doesn't make any sense. Tesla is cornering the market when it comes to EVs. I think that's a given. I think to deny that would be delusional. And at the same time, they're going to have AI that will turn into a product that people will actually use in the real world, instead of like a ChatGPT type of assistant. Like I just can't see how an end user would use AI more than what Tesla is going to be offering. So I really wish people would price that in. At the same time, I wish Elon would come out with some with timelines on some new products and costs for them as well. So I did mention a time at 10:14 a.m. Now, don't mind my time. This is going to be Pacific time. But you're seeing here, Elon was replying to a tweet from Farzad, and Farzad runs a YouTube channel. And Farzad was talking about how there's a really great demand for Teslas and Jeeps compared to all the other cars. And this was kind of a regional distribution video. But anyways, Elon responds to it saying affordability is the limiting factor. And add 3 hours to 7:14 a.m. Just to say this is 10:14 a.m. Now, let's go back to the chart and look at what happened at 10:14 a.m. again. So I'm going to zoom in on the minute chart here. And 10:14 a.m. would be, let's see, 10:14. This is 10:06, 10:13, 10:14, right here. It just started to sell. And it never made a higher high than it did at the 10:14 time, which was somewhere around $269.59. So this was the high for the day. That's it. Like you're getting this for the day. And every time it touches that, it sells off. And it's sold off right into the close. I think that it really wasn't great sometimes when Elon tweets or talks on our earnings call. But the reality is his personality is responsible for the company's success at the bottom line. That his desires and his dreams are what made clean energy vehicles cool, like something palatable by the general populace. So you take the good and the bad sometimes, but the reality is, I don't know if let's go back to the tweet. Is it really that bad though? I mean, I think that the answer is you can see it two ways. Where this could mean that Elon really doesn't care about how we view the auto gross margin for the coming many quarters, a year. It's all about, in his mind, creating creating value by lowering the costs on cars, and that thus making it affordable for more consumers who would then buy more cars. And with that increased volume, he'd be able to realize all the minute cost savings and efficiencies that Tesla is employing on production lines and the vehicles themselves. And at the same time, undercutting the competition and doing it in a profitable way where, people like GM, they don't really see profits. And if they do see profits, I believe for something, they're projecting something like 5% profit on an EV car within some years. And Elon's already, seeing profit over 3.5 times that now on his cars. So affordability is always going to be paramount for Elon. Having cars that are affordable means mass adoption. That's all well and good, but it also kind of says that the idea that we have of a trough margin being in this past quarter, we're not sure if that's really the bottom for the margins. And once again, we're going to be in kind of limbo again for another 3 months until the next earnings season. We're going to be in limbo for the entire time to once again see our margins bottoming out. And we're going to have a good idea as well. Are we seeing price cuts to the Model 3 again? Are we going to see price cuts to the high-end models as well, like the S and X? What kind of pricing are we going to see on the Cybertruck? This all kind of lends itself to the idea of what type of margins we're going to be looking at. But the prospects of holding stock and wanting it to go up a lot is going to be, it's going to be it could be a very long consolidation from here until the next earnings season, where Tesla will show us margin again. And at the same time, you might get little bounces with, let's say tomorrow, FOMC, Jerome Powell says, inflation is coming down in the way we expect, and we'll reevaluate, in the next meeting. It would be a live meeting, but from what we're looking at, we're on the right path and we're beating inflation. That would be a really bullish kind of statement. Or, if he shows the dot plots where the plots move down and they're not going to be, perhaps not all members will be but anticipating an additional rate hike for this year in the September meeting, perhaps, and a pause for the rest of the time, hopefully. But also, if we get any type of wording that in the 2 months after this, that we're not going to get another rate hike, that's going to be pretty bullish. Does that help Tesla? It's possible that when rates start coming down for loans, that Tesla can realize more margin because more people will be interested in buying cars, and thus the overall volume will increase, and he doesn't have to necessarily reduce prices to move cars anymore. And we also can see maybe that the Highland and Cybertruck would create a lot of just demand with just being new, and it wouldn't require cheaper Model 3 Highlands, and it wouldn't require cheaper Cybertrucks, as if the demand is there because they're newfangled Tesla products. Another one of the reasons why Tesla sold off after hours was, like I said, the QQQ was selling off pretty hard, kind of in line with Microsoft. And we'll take a look at the comparison chart between some names like Amazon and what have you. So after hours, an article came out from the FTC. Article came out from Politico and some other web news sites that the FTC is close to finalizing the complaint or the lawsuit for Amazon in regards to they're having issues with how Amazon Prime might be forcing people to utilize Amazon logistics services to sell goods through Amazon Prime to Amazon Prime customers. It also says it might not be showing pricing from competing products on different websites. There was a lot of issues with how Amazon was competing against their own, front running their own customers, utilizing data that customers don't, their wholesale customers don't have, and then front running them by creating product at a lower price, understanding the profit margin from their wholesalers on their whatever is it FTB? Whatever the people sign up to use Amazon Prime as their logistics, but selling their own product through the website. So Amazon was taking fees from these people, charging them for shipping, making them responsible for returns, and front running them with their own competing products at lower prices. Amazon can be said they're running a pretty sketchy business. It sold off pretty considerably. I think it was something like 2% after hours or more. Microsoft was 3%. So it really dragged down the QQQ, and Tesla really was affected by that being a little bit higher beta than the other names. But let's take a look at the charts again, and we'll kind of dabble and see what we can glean from this. So first things first, looking at the Tesla chart again, we're seeing that it was kind of like there was some bullish momentum at times, but you're seeing people really wanting to get out of the stock. And this type of price action is like whenever you see these pops, it just immediately sells, and people really want to get out. And it made a lower low on that time frame. It's getting kind of into the area where it's somewhere in this, where there might be some interest in this area of consolidation in these couple peaks from last week. So maybe there will be a demand somewhere around this area. Oh, I moved my little squiggly line, sorry. And let me draw out that area so we can kind of keep reference to that in future videos. But this is maybe our last stand. If we dip into here, which we already have in the after hours, but during cash hours, during regular trading hours, if we're breaking below this, we were hoping that this area would have been a double bottom on the local time frame, and could have seen some upwards momentum. But we're selling off with conviction. This is a pretty considerable move from the gap up open to the low of the day. That's almost 3%, and it closed lower than that as well, and sold off into the after. It's not a good look. It could be sympathetic to how other car companies are reporting and their overall sales and their overall outlook, but it's not necessarily great. It could be just setting up for. It could be you can look at it another way. A lower Tesla share price could be a good setup for FOMC, and we'll take a look at FOMC price action as well. So you can kind of gauge this of, reducing your risk, or if it's de-risked already, is it a possible better long, of course, being cheaper than it was yesterday. And yesterday's price action was amazing. So maybe this is a simple take profit as well. We're going to find out tomorrow, because the news is going to be, that's the driver. Like you're not going to, even if you had great earnings like Google did, you're not going to get around FOMC. Like Google's gains can be completely wiped out by 2:30 tomorrow morning. I'm sorry, 2:30 in the afternoon tomorrow, because it's really about the rate hike guidance, and it's going to be a lot about inflation on Friday as well. So a lot of volatility. Remember, VIX is very, very cheap. It's still less than 14, I believe. So yeah, we're seeing less than 14 up here. It's going to be, it's an easy hedge if you want to protect yourself. And that's what happens when you have lower VIX. Puts are cheap compared to what we're paying last year, guys. Remember, puts were very expensive last year with really high volatility. Like on an average, we were saying when VIX is near 20, that's when you sell. Like, that's hilarious. It's kind of hilarious because like for us, it's like, oh, VIX is 25, we should buy. I'm like, anyways. We're taking a look at the Microsoft chart because this is a big mega cap name that kind of really hurt after hours, and we talked about why. We're also looking at a comparison with NVIDIA. So when the earnings call started and they're talking about their guidance, it's when it was this spike right here, and then it dropped very, very quickly to a low of the after hours of a 5.6% difference. That's a Tesla move for Microsoft. So the overall drop from the close, let's see, we'll do a quick. And the reason why this is relevant is because this is about AI. Let's say that's the close. So 3.75%, let's say, after hour drop. But NVIDIA is benefiting from this earnings call because they're talking about how they're having to spend so much money to get their AI infrastructure up. And so even though everyone is kind of bearish on NVIDIA just because it's gone up too much, quote unquote, It went up after hours and had a it actually peaked above its daily high, and it kind of closed after hours at those highs during the cash hours. So that's really, really bullish for Nvidia, just because, just like in Tesla's earning call, Tesla was talking about how they would take any AI chips that Nvidia has to offer, and Microsoft is probably doing the same. So this is all bullish for Nvidia, who's the only real benefit, but not benefactor, but the one receiving benefits from this AI revolution. It's really just Nvidia. If you look at AMD's chart, they don't have an AI chip coming out for months, and they're not going to have the software and the overall stack, which is basically Nvidia offers a turnkey solution to AI, from just the networking to the actual boxes and server, all the boards and whatever. They can do everything turnkey. And AMD just doesn't have that. They don't have the software for that. They don't have the cloud system that Nvidia is going to have. So unfortunately, if you want AI, as much as we love Tesla, Nvidia is the real play when it comes to AI. It was much stronger today. It had a really, really strong open, and Tesla had the complete reverse of this kind of move, unfortunately. So we can talk about Tesla being an AI company, but until we are able to monetize, even Microsoft is not immune to the inability to fully monetize AI, because people are really scared that this is just going to be a .com like bubble. Now let's get to the QQQs real quick. In the QQQ, we'll have a comparison of a couple names. Tesla is going to be here in the darker purple. In the lighter purple is going to be Microsoft, and Amazon is going to be in the green. And you can see how the QQQ kind of sold off in sympathetic ways to the drops in Amazon and Microsoft, because they were all pretty flat until the earnings call started. So everything was flat from here to here. This is generally flat, even Tesla. And as the sell-off started happening, from about 6 p.m. Eastern time, it started selling off towards the end of the earnings call. And you can see how it just kind of sloped down and consolidated. And Tesla just kind of sold off the entire night, basically, without really much interest in people wanting to buy. But that doesn't really say much, because last night Tesla was down a lot and opened up a lot. So the futures and aftermarket hours are very illiquid. So they're not really necessarily representative of the price of Tesla. But this is going to be really interesting. If you are short the market, being short the QQQ is a safe way to kind of ride any tech weakness. And even though the QQQ sold off, the SPY and the Dow were affected, and didn't necessarily have really good after-hour showings either, because Amazon, Tesla, Microsoft, they all weigh very heavily in any index they're in. Apple actually was pretty resilient, along with the Nvidia name that we talked about as well. So let's consider FOMC. I mentioned yesterday we would be doing a very slight comparison, not comparison, but a little bit of a dive into the price action of what an FOMC day looks like. So I just highlighted a couple boxes of FOMC price action on the 5-minute time frame. So what you usually get, this is from the last FOMC, you get a consolidation. You have maybe a slight peak. It was only 0.4%, something like that. This is in the June meeting. And when the notes are released, that's here at 2:00 Eastern time, and the notes come out, and this comes with a decision of the rate hike and the verbiage of whatever they want to talk about, which we'll talk about in the press conference speech as well. So it sold off pretty considerably, and the low was about negative 0.85%. It then rallied to 1%. It then sold off again, and it kind of tapered off into the close, and it was essentially a slightly red day. So basically, it's a pattern, a consolidation, and a move. That's what it's looking like. But let's look at the other days for this 2023 year for the other FOMC meetings. Okay, so we have a highlighted area for the March meeting. Is this the May meeting? I'm sorry. So we have a consolidation. The highest move was 0.8%. So that's a pretty good move. And then it sold off considerably. to what, a double bottom. That is horrific. A 2.37% drop. And it consolidated and never went higher until a gap up in the next day. So sometimes this is what. So there's always going to be a move, and it seems like so far in the 2 meetings, the move is down after the decision and notes are released, and there was no other move for that day. But it did have a positive move for the next day, and then consolidated forever, essentially. Not a great time spring was. Not a great time. Okay, so let's look at the meeting during March. And so this is a little bit more complex. So you do have consolidation. Let's say you see a high of 1% by right before 2. So this is 1:50 p.m. I'm sorry, this is 2:50 p.m. So this is about when the press conference is going to be going on. So let's look at it. Let's find the 2 o'clock, so which is the 1400. Okay, so there was consolidation, and so that 1% gain wasn't part of the regular day. So maybe the regular day. I'm sorry, this is a rectangle. Let's leave that. So let's say it was the regular day high was 0.36. So if there isn't a green, it's going to be somewhere in the range of 0.3 to 0.4%, best case scenario. And then it started to rally when the decision was made, and it got up almost 0.86%, kind of fell, kind of just ranged. And when the press conference started, this is around 2:30, you can see he went high from that low. It was a 1.25% move. So it was up, and just generally up for now until he started speaking, and then it's sold off completely. And that sell-off was 2.56%. So some of these sell-offs can be pretty severe. So it might be a move, but the move is then reversed, right? It was an up move, then it was a down, then up, then down all the way. So what am I trying to say is that, number one, the moves are going to be pretty severe sometimes. Number two, the moves will reverse themselves eventually. And on the next day, it gapped up a little bit, but generally it's sold off for the next couple of days. Okay, so here's the first meeting of the year, and this is going to be the one at the end of January. Yep, so February 1st, essentially. And so it was a gap down, and it kind of made a high. It went up. On the rectangle again. So it went up maybe 0.3%, like we mentioned, but then it kind of sold off as well into, let's find it 2 o'clock. So this is 2 o'clock. It went down 0.5%, and then kind of this range there. This is basically just maybe a double bottom on the time frame. So you have 2 lows here with good buying, and at 2:30, which is when the press conference starts, it went up a lot. It went up 2.5% as far as the high, and it closed up around 1.85% from the time the actual press conference and his speaking started. So there's some different ideas. Number one, the moves are going to be violent. Sometimes the moves will reverse themselves, like the sell-off gets reversed, sells off again, gets reversed. So the first moves, the third moves, sometimes they're not the right moves. And that's something you really want to keep your eye on. If you have, when the notes are released at 2 o'clock and the decision is released at 2 o'clock and the stock goes up a lot, stocks go up a lot, it wouldn't hurt if you see a move go up, 1%. Is it going to really hurt you when puts just got that much cheaper? That's not financial advice, obviously. I can't make you guys spend money. I don't want you to spend money just based on that idea. But just know it's very possible that the moves will reverse really, really quickly. So remember, we have a very consolidating like day. So this is, how many hours are we talking about here? So this is 9:30 right here. And this is, 4 hours and 30 minutes of nothing happening. So there's 4 hours and 30 minutes of basically consolidation all day long. So what you don't want to find yourself doing if you're day trading is get caught up in what's called the chop, which is that kind of rangy consolidation. They're just waiting for a move, because the real news is going to happen at 2 o'clock when the notes come out and the decision is made and the forward guidance on rate hikes. That's all gonna play out. Sometimes the AI, the algorithms can process that really quick. You might see a lot of buying, then you see the sell-off, then you see the buying, then a sell-off, or the reverse. It's going to be the sell-off into just a sell-off, or a sell-off into a new high. So really just be really nimble. If you're seeing big swings either way, does it hurt when it's when puts and calls just get so much cheaper when it swings the opposite way? It doesn't necessarily hurt. What about the hedging for Tesla? Well, Tesla is really affected by rates. Okay. And if there's guidance that they're happy with the inflation war, the fight on inflation, then yeah, Tesla will go up, right? Because there is light at the end of the tunnel. But it doesn't mean that that move would be sustained. An upwards move in Tesla could be sustained. For the reason is that just because you see a light at the end of the tunnel when it comes to interest rates, meaning them coming down in the next X number of months, the thing about it is that is X for real. That's a variable. We don't know when they'll start cutting. There's only two scenarios when they're going to start cutting so people can realize those lower rates. Well, number one, if there's a recession, they'll cut. Or number two, that inflation is staying consistently at 2% and they'll cut. But it'll be a very slow cut. And it doesn't mean rates of auto loans are going to drop considerably. So the move that you get today can easily be reversed. The move you get on FOMC day can easily be reversed by Friday, because Friday is the real gauge for the Fed in their war on inflation. If inflation on PCE comes in cooler on core, and I think cooler on core, maybe in line a headline. Headline can be maybe 0.1 up, just because energy costs have gone up this summer. I think we're seeing that. If you happen to look at gas stations or your electric bills or what have you, energy is a little bit more expensive than it was early on. So we're going to see those costs come in with comps for comps of last year. That could be much cooler than, basically comps that be tougher to beat. The June one was an easy beat because June inflation was very, very high. I'm not saying July of last year was very low. It was very high still. But as the fall comes, the comps will get more difficult when it comes to inflation. But just have some comfort and know that core is what they look at, and core can only come down. That's the hope, right? And core, really, we're talking about shelter costs. We're talking about home costs, rent costs. And we need to see that come down, because as much as we already know that we're getting a quarter point rate hike tomorrow. We know that. The whole market's priced that in for months, weeks. We don't want another rate hike. And we also want to see core inflation come down this Friday. And then you'll find that Tesla will have a lot of interest at that point in time, along with other auto manufacturers, your Rivians of the world, along with any other, really rate sensitive stocks. We're talking like real estate, REITs, and things even like mega cap tech. So guys, thanks for listening. I really hope that Tesla can find its legs and it continues some upwards momentum, because at the end of the day, we're talking about holding stock of a market leader, a leader in technology, and basically what I believe is the future of a real applicable AI that you use in your daily life. So thanks so much for listening, guys. Wish everyone luck on FOMC day. I hope we all survive somehow, some way. Thanks for listening. Bye.